Through perseverance, many people win success out of what seemed destined to be certain failure. Benjamin Disraeli. Now, you guys remember yesterday I quoted Margaret Thatcher. Benjamin Disraeli, another prime minister from back, I guess in the 1800s. But again, let's learn from these successful people. Perseverance. They all hit on it again and again and again. And for what we do, learning how to track stock charts. If it were easy, everybody would do it. We do it because we want to have the knowledge and to be able to determine which way stocks are moving, follow trends accurately. That's what we are working on learning how to do. That's why it's so important, 10 to 15 minutes a day. Perseverance, a little bit of time each day to pay great dividends in teaching you how to follow charts. We are going to jump in. We see stocks are up for the day. Bonds and gold are down. Now, what do we see happening? We see the market still has downward pressure on it. Why? Because the price percent oscillator is still down. It does appear to be moving up toward the red signal line, but it looked like it was going to do it over the course of about 2 weeks, back on the 13th of September, the week ending then, and the week ending the 20th of September, but it didn't do it. Now it's trying to move again in that same direction. The derivative oscillator has flipped over to positive. Price percent oscillator still negative. Of course, even if it turned positive, we don't call anything until the week is out. You never call a candle until the candle is drawn. We see a green open box candle with a big wick about the same size of the candle body itself on top, maybe just a little bit smaller. But we see, like we said, the derivative oscillator gaining upward momentum. Go to that 2-day chart, getting close to crossing over. Now, this is just the first day of the latest 2-day candle. The prior one represented Monday and Friday. The prior Friday, this one, candle body is higher, and we see that the wick is higher than the prior wick. So green open box means strong up movement. Won't call a crossover until and unless it occurs at the close of the candle. Derivative oscillators still negative. And we go to the 4-hour chart. What do we see there? 4-hour chart crossed over going up back in the afternoon on Wednesday the 10th. Popped up all the way there on Friday, sideways on Monday, and then took off again, moving up on Tuesday, blew through the weekly trend line all the way back on Friday and had already passed through the 2-day trend line back on Thursday morning. So again, actually right there at Wednesday afternoon, Thursday morning. So again, continuing to move up. Don't have any kind of practice trade yet on the S&P. Why? Because the 2-day and the weekly are still down. And again, we might have a weekly vertical crossover by the end of the week. We may not. It may just be toying with you and bounce off the red signal line again. Again, these markets are just skittish. Why? Because it's October. October is typically where the big crashes occur, and traders know that. I do encourage, if you don't have a copy of the Trader's Almanac, I have one on my desk every single day I do the show. And I encourage you to go ahead and get your 2020 version of the Stock Trader's Almanac. Look online. You can find it there. I don't have a discount code for you. Jeffrey and Yale Hirsch, his dad started it. Great knowledge, great stuff. Just really helps you with a strategic calendar and all the knowledge in there as to what the markets have done over the last many years. I can't recommend that highly enough for you to study. Now, let's go from the S&P 500 back to the weekly and to the NASDAQ 100, which are the tech stocks. We see a green up candle, a strong one forming. Derivative oscillators already positive. Price percent oscillators closer to crossing over maybe a little bit than the S&P 500. We'll continue to keep our eye on those things. What's up with the 2-day chart? Of course, it is trying its best to cross over. We'll see how the day ends on Wednesday, whether or not that is a certified 2-day crossover? If so, we will note that for you. Next thing we'll be looking for is, of course, the weekly vertical crossover, which would only happen on a Friday. What do we see going on with the 4-hour chart? Continuing to move up. It crossed over, going up all the way back on the afternoon of Friday, the 4th of October. So again, those markets are again trying to push higher and higher. But again, as we look at the 4-hour chart, where do we see things? We see things topping out back on Friday the 26th. That week, we saw things top out on Friday the 26th of July, hitting a top again right around, yes, the 13th of September. Oh, and one of you said, I use the word again way too much. I don't notice that. I will try to stop doing that. Of course, every good speaker makes sure not to put oohs and ahs in everything they say. I dropped that years ago. I will attempt to drop again from my lexicon. So we see things moving higher and higher. We'll see if we do reach another top. See, I managed to stay away from again. Okay, we'll go to the 2-day chart. We've talked about where that is. And of course, like I said, we've talked about where the 4-hour chart is continuing to reach higher highs. Just wait and see how the Qs shakes out at the end of the week. Now we go to 20-year bonds. Always start on the biggest chart. See a red down candle forming. Note that the candle body is solid red. We have a wick on the bottom, no wick on top. That's a good sign, but we're not getting anywhere near the lows that we got back on the week ending the 13th of September. We do, however, see that the price percent oscillator is pulling away from the red signal line. Derivative oscillators gaining downward momentum. All of those things are occurring. As that chart is pulling away, we go to the 2-day chart. And of course, we see on there stair steps as things continue to move down. Just the latest day making a lower low just barely. And this is just the first day of the latest 2-day candle. But but the charts are down 1.21% on 20-year bonds. Like I said, the derivative oscillator is gaining downward momentum. I had some folks ask questions about why we pulled the trigger, and I can't understand what they are asking. I've had 2 or 3 folks ask about this latest practice trade in 20-year bonds and where we were pulling the trigger. When we look at the 4-hour chart, we go back to the 9th when it had already pulled back and rolled over going down. That was our jumping in point at the close of the 4-hour candle in the morning, somewhere around that last at 144, the opening at 144.86. So somewhere in the 144.50 mark, something like that, was our jumping in point for the down move. And of course, we've seen things shift down. We had a bit of a pullback yesterday. I encouraged you to keep an eye on the 2-day chart. And of course, the 2-day chart has been going down since all the way back when it crossed over on the 10th of September. And it has continued to be in the area of down movement because the price percent oscillator was going down. Candles traded around a little bit, but never enough momentum to cross over going up. And these last 5 days of movement, 2 full 2-day candles and a half 2-day candle, which of course is a day, 5 days, show gaining momentum going down. And of course, our jumping in point, which again was clear to me, and I talked about the workup to that on the show, where we had the pullback that started on the 18th of September and continued to move. Of course, we had the weekly vertical crossover going down there on Friday the 27th. Market continued to move up, though, on that 4-hour chart without a good jumping in point. And then we saw that rollover occur, and it's done quite well. Like we said, somewhere around the 144.50 mark, all the way down to 139.55. That's not bad gains on a practice trade right there. And I don't see what other folks are not seeing there. And we talked about it quite a long time as to what we were seeing and how this trade was or was not developing. In fact, it did not develop earlier on because we had some of those pullbacks and laminations, but they ended as things started to pull away. In fact, it never recrossed back over. So we continued to keep it plugged on a down move. So anyway, that trade has been working very nicely. We're going to leave bonds, go to gold. What do we see on gold? Down for that 8.70%. We have a red down candle with a wick on the bottom, not going as far down as the prior wick went back on the week ending the 4th of October. We do have a solid red down candle with no wick on top, which is nice to see. Price percent oscillators pulling away from the red signal line. The most important thing, because price percent oscillators are number one indicator. Derivative oscillator gaining downward momentum. Remember, the derivative oscillator is a triple smooth derivative of the relative strength index, which helps us see overbought and oversold conditions. Remember that the price percent oscillator does not help us with that. It is unbounded and does not assist us in seeing overbought, oversold conditions. That's the reason we have on our chart the derivative oscillator. We talk about that in the book. If you don't have the book, please get in line to get them. I just sent out the last copies of the 12th printing today, but the 13th printing is on order. And if you go ahead and place your order, look for the link in the show notes, you'll be the first on the list to receive a signed autographed copy of the 13th printing of Charting Your Way to Wealth. We also appreciate all of our Patreon members. The next Patreon Q&A will take place on Wednesday, the 13th of November. And I've been reaching out to some of our Patreon members who had questions about getting materials and those kind of things. So again, don't hesitate to write us, cw@chartingwealth.com. But we see that gold weekly chart heading down. We go to the 2-day chart, not hitting the same lows that it hit on the previous 2-day candle. But we do have a red down candle. Candle body's bigger than the prior one, but not the wick on the bottom. It is nice to see the derivative oscillators gaining downward momentum, and that price percent oscillator is moving down at a steeper angle. So that is good to see. Trying to figure out some way to draw a 2-day trend line. Maybe the best we can do for now is connecting the 30-day and that is the 30th day of September and the 14th day of October as far as trying to put together a trend line. But the weekly and the 2-day still in confirmed down moves. What do we tell you to keep an eye on over the last few days? Of course, is when that crossover, when and if it would occur. It did occur on the 11th. We, of course, then saw that pullback going in the opposite direction of the jumping in point after the move crossed over going down in the morning. And, of course, if you would have found yourself jumping in, what did it do? Well, it backtracked for a day and a half. But then over the course of this last day, we saw it moving back down again. Now, what gave us a hint to that? The fact that the 2-day and the weekly continued to move down, excuse me, and remain as strong as they were. Remember, when you jump into a practice trade, particularly when you're using the 4-day chart as a trigger, once you do that, you help yourself determine how long to stay in based upon many factors. 2 of them are how the weekly and the 2-day are holding up. What is the price percent oscillator in particular, along with the derivative oscillator, along with the candlesticks, but particularly the price percent oscillator, what's it telling you as far as where the momentum is, where the trend is? That's very important to watch. And that's what we saw continuing down in gold. So keep your eye on things. That price percent oscillator is heading down quite nicely on the smallest of the charts, the 4-hour chart too. Folks, that's where we are as we end the day. We always appreciate you being with us. You have questions, problems, concerns, you can feel free to write us, cw@chartingwealth.com. We'll try to address them if we can, like I did today with those questions about the TLT practice trade on the show. If not, we'll try to write you back. God bless. All the best from the whole team here at Charting Wealth World Headquarters.